Hello and welcome to MF Corner's special YouTube edition. I'm Pavitra and today we're going to talk all about getting your goals right, about deciding on some goals which are important to you, prioritizing these and then learning to invest for them. I have with me Mrin Agarwal, financial educator and director at FinSafe India to take us through this and all of the steps that you should really follow. Mrin, thanks a lot for having, for joining us and taking us through this episode. So, I want to start right at the beginning in terms of what are the goals that you think everyone should have and goals that you think are common across the board for people.
So good afternoon, Pavitra, and a very happy new year. One of the goals that is common for everybody is really to have a good retirement, right? And a good retirement means that you have enough for your day-to-day expenses, you have enough for having fun, and you have enough to keep yourself mentally engaged as well. So that needs to be the first goal that anybody is really saving for. Other than that, of course, if you've got children, then you have children's education goal, their marriage goal, and the house goal is another goal. These days, of course, when we look at the unconventional goals, it's about saving for experiences. It's saving for a big purchase, probably that you cannot afford, but would like to have, for example, a super luxury car. So these are some of the goals that most people have these days.
Okay, so those are some goals that you can, look at saving for during the course of your life. But how do you pick which goals you should invest for first? I know you mentioned retirement, but what order would you move in for the other goals that you said? And are some of these, goals that should be worked on simultaneously as well?
So yes, first of course is retirement, but after that, I think one must focus on the goals that are coming up soon and where there is a shortfall, because you do want to meet those goals as well, right? And of course, for most investors, there is always this dilemma that how do I meet my goals? Because there is going to be a shortfall in the amount that you can invest, and the pressure is there to meet the goals. So I would always say that while you're investing for the goals simultaneously, focus on the goals that are coming up in the shorter span and where there is a shortfall.
Okay, that makes sense. Mrin, another goal can be to just become debt free, right? If you have some debt, say you've taken on some, money for an education loan, do you always pay it off completely before you start to invest for these other goals? Because that can also push back your, your saving for these very big goals by quite a few years. So how would you look at that?
I would always say that have a balance. We normally recommend a 30-30-40, which is 30% of your take home going into expenses, 30% going to EMIs, and 40% going into savings. So I think it's very important to do both simultaneously, because if you only look at paying off your loans and you're not saving anything, then you don't have anything saved for the rainy day. So I think it's important to do a combination of both. Of course, having debt means that you are paying an interest, and even though there might be some sort of tax benefits on it, but the point is that you're still paying an extra amount for that particular asset, right? So ensure that you limit your EMIs to 30% of the take home, because when you have a large percentage of your take home going into EMIs, and I've seen people having up to 70% also, that interest is compounding and ensuring that in the long term, you're ending up with negative savings.
Okay, I think that's a good guideline to, be able to follow. So, how much you can invest, how much you can put into your EMIs as well. But Mrin, something that we see a lot of people doing, and I think I'm guilty of having done this in the past as well, is that you're investing in good, reliable funds as well, but without a clearly defined goal, right? You're only allowing your money to grow in mutual funds, which doesn't sound bad when you think about it like that. But of course, there is a downside to that. So how would you think of that?
Yeah, I'm not in favor of that at all, because what happens is that firstly, you don't know when to exit,
Yeah.
right? And second is that when there is volatility, you don't know what action to take. So let us say that you've invested and 2 years down the line, the markets are very volatile, and let's say it's down by about 30-40%. For someone who knows that my goal is 10 years away, and so I can hold on, right? So someone who knows if their goal is 10 years away, they will have the ability to take the decision to hold on. Whereas for someone who doesn't know what is their goal period, they would get very perturbed. And this is what we normally do see in the markets, right? That people tend to stop their SIPs or exit their SIPs at signs of volatility.
Yeah, I mean, I think it's much easier to get gripped by fear, right? If you're not sort of clearly defining your goals. But Mrin, lastly, just to wrap up this conversation, when you're investing for such long-term goals, what do you think are some mistakes that you can avoid when looking at this kind of time horizon?
Well, firstly, use a calculator so that you can assess what is the right amount to be invested. So there are a lot of people saving for goals, right? And they feel that this could be the right amount. But what happens is that most of the time people don't take into account inflation. So many times people tell me, I want to have 1 crore at retirement. And my question is that, how did you figure this number out? Because that number has to be based on your current expenses and inflation, right? Similarly, when you're saving for a longer term goal, let's say like child's education, you need to look at that number after applying inflation, right? So I have people saying, I want to save 20 lakhs, right? But I need the money 10 years down the line. But 20 lakhs with inflation 10 years down the line is going to be 35 lakhs. So firstly, use a calculator to know what is the right amount that you need to invest for the goal. And secondly, do not be too conservative, because today the value of our goals is huge in terms of the absolute number, and the inflation on some of these goals, like for example, inflation on child education is in the range of about 7 to 10%, right? And so, keeping in mind that we need to beat this inflation, you cannot actually afford to be conservative. You need to look at a combination of instruments that's going to help you beat this 10% inflation.
Okay, that is very helpful, Mrin. Thanks a lot for taking us through, step one, that is really setting up all of your goals, deciding what is important to you, and then learning how to work towards them. Thanks for joining us for this quick session on setting your goals right.